welcome to Buy Now, Sell Now, the weekend edition. I'm Mubina Kapasi, and boy, what a week it has been. We came tantalizingly close to the 10,000 mark, but yet that all-important and psychological level remained all elusive. But of course, this is the show dedicated to answering all of your individual viewer queries and getting you top picks for the next week and of course, for the long term. So let's tell you what all we have lined up for you on the show. Today, we will be discussing the stocks like DCB Bank, Fortis Healthcare, as well as Emami. And also later on, we will be having our individual portfolio segment. So let's bring on board our guest then who will help you out with all of your queries. Siddharth Sidhani, the Vice President of Equity Sales Advisory at Anand Rathi, now joins us on the fundamentals. And on the technicals, we have Gaurav Bissa, the Derivatives Analyst with LKP Securities. Hello, gentlemen. Thanks so much for joining us on Buy Now, Sell Now weekend. Let's go to our first query then, and it's coming in from Radhika Joshi, a professional from Mumbai. She writes that she has bought about 200 shares of DCB Bank at 113 rupees per share. Her question is, should she hold, sell or add at the current levels? Well, she's a long-term holder. She has a time horizon of about 1 year. Well, without any further ado, let's go across to our technical expert first. Gaurav, what would you advise Radhika to do on DCB Bank?
It has seen a weekly breakout sort of, but I would also like to mention that it's been trading in a range. If you look at the weekly charts, there is some sort of consolidation that we are seeing in DCB Bank. There is strong support at 180. If that is broken, then we can see it heading towards 150. So I would recommend booking some part of the profit and have a trailing stop loss of 180. One can play for targets of 225 to 30 in next 6 to 8 months.
Okay, well, you're sitting on some good money over there, but hold on for now is what Gaurav is advising. Let's understand a fundamental perspective then. And Siddharth, what do you make of DCB Bank? Do you think it's one of the better banks in the space?
Well, relatively speaking, we have a hold on DCB Bank. If you look at the loan growth along with the NIMs, I think along with the CASA momentum, I think that will keep the NIMs going. In fact, FY18, we can expect 20 odd basis point expansion in NIMs. Which will come into the numbers. So all in all, it's a good quality bank to hold on. I think with a 6 months perspective, one can keep holding this company.
Okay, so I think it's a consensus hold call coming in from both of our experts when it comes to DCB Bank. Let's move on and bring on board our next query, and that one too is an email query. It's coming in from Sanjay Sharma, a businessman from Patna. He writes that he has bought 300 shares of Fortis at 151 rupees per share, and he wants to know whether to hold, sell or add. He has a 10-year time horizon. Well, lots of problems plaguing this stock, unfortunately, and that's the reason why at this point of time, Fortis Health is at about 164 rupees. He's still managing to make some money, mind you, but the stock, of course, has come off quite a bit, off late, be it the promoter selling or all of those issues in relation to the promoters and the payments that it have to make to other parties. On the fundamentals, Siddharth, do you think that this is a safe stock to hold given all of the headwinds that surround it?
Well, for the time being, one can keep holding. The headwinds are definitely there. Promoters selling of the stake. On top of it, after the good run-up, we've been selling some kind of a profit booking. But if you look at the numbers were quite good. If you see the EBITDA margins, which has expanded more than 200 basis points in the last quarter, that is Q4, and the diagnostic business, which was in the uptrend, can give a positivity in the numbers going forward. So 15% CAGR growth can be expected for next 2 years for this company. Amidst this volatility and headwinds, if you can keep hold for 3 to 6 months, we can take a call on a quarterly numbers going forward. But I think we can see some positivity coming in terms of numbers are concerned.
Okay, so perhaps wait right now. In fact, we did see a lot of buying come by and declines as well when it comes to Fortis Health. Hold on, perhaps wait for the numbers to come by and then maybe take a call. But on the technicals, like I said, correct me if I'm wrong, Gaurav, but we have seen some buying come by in lower levels. What do you make on the charts for Fortis Health?
Well, it would be difficult to predict how it would turn out after 10 years. I can only give a view of, say, a year and a half. If you look at the long-term charts, there's a strong support seen at 130, 125 zone, and as long as it's trading above these levels, there's a possibility the stock might try to retest levels of 225 to 30. That can be seen next 6 to 8 months, and if that is sustained, even a 250 to 75 cannot be ruled out. So for a short-term trade, or say for a year and a half, I can suggest a stop loss of 125 to 130 and play for targets of 250 to 275.
All right, so that's the view coming in on Fortis Health. And a final query for today is from Ravi Karnik, a professional from Ahmedabad. He says he has bought 100 shares of Emami, purchased at 1,072 rupees per share, and he has a long-term time horizon, a fairly long one at 10 years. He wants to know whether to hold, sell or add more in his portfolio. Well, given the fact that he is a 10-year time horizon, he is such a long-term investor, he's just bought 100 shares. So perhaps it would be advisable, if he's confident about this investment, to consolidate his holding over here. But firstly, of course, let's understand if this is the right stock to, really bump up your holdings. When it comes to Emami, when it comes to financials, it's not really been able to perform as well as its peers. Nevertheless, prospects seem bright with rural India getting its much awaited monsoons with GST, etc. So Siddharth, let's understand your perspective first on Emami. What should you advise him to do?
Well, our sense on Emami for 10 years perspective, what we believe is this can be a multiplier. But with a 12-month horizon, the target price would be 1400. Predominantly on the back of Cash King, the acquired company, actually that is adding up to the volumes big time for the company. Rural growth can come up as we know GST, because of GST unorganized players will be feeling the pressure. So the organized player like Emami will be doing good if due to monsoons and other things. If the rural economy revives faster, then I think Emami is very well placed. So with a 10-year horizon also you can keep holding this company, but with a 1 year or a 1.5 year horizon, the target price is 1400. It's completely a buy. Stick to the company and sail the ride.
So very optimistic views coming in on Emami Limited for a 10-year time horizon as well. This is a stock that you should continue holding in your portfolio. With such a long-term horizon, it may not be advisable to really take a technical view, which is more of a short-term time horizon. But nevertheless, for the benefit of all of our viewers, Gaurav, if you could just come in on Emami Limited.
Well, it's been trading in a range. If you look at the weekly charts or if you look at the monthly charts, it's been trading in a range of 950 to 1300. It's in the middle of the continuum. I would say one can keep holding it, have a stop loss of 950. On the upside, you can see targets of 1300. If 1300 is taken out, then I think you can expect another 250 to 300 point up move come in, because that would be a breakout on daily as well as the monthly charts, weekly and the monthly charts, and it can propel it towards 1500 kind of level. So I would recommend holding on, have a stop loss of 950.
There you have it. We have been able to address all of your queries, or at least we hope that we have. We'll slip into a short break. When we come back, we'll be discussing Siddharth's model portfolio on the show. Welcome back. Thanks for staying on with us on Buy Now, Sell Now weekend. And it's that time of the show where we will address some model portfolios. And we have none other than Siddharth Sidani, who will run us through what exactly may be the stocks that you should keep on your portfolio. So Siddharth, running through your stock list, it looks like a very diverse list and more or less concentrated on the mid and small cap space. So let's start off with the first 6 stocks in your portfolio. There's UPL, Emami, Dalmia Bharat. There's also, in fact, Supreme Industries, PI Industries, and even mid-cap IT name Cyient. What makes you optimistic on all of these stocks?
Well, the entire model, Mobina, is based out of 5 pillars. That is agri monsoon is the first one, second is defense, third is consumption, mid-cap IT, and fifth one is some of the niche plays. Running up with the first one, UPL, again in agri space, we can expect a 15% CAGR growth. The way monsoons has been doing good, UPL can be a game changer going forward. Second is Emami, as I addressed in the query itself. It's a great company. Organic growth of 15-16% can be expected with the midterm positioning. Dalmia Bharat, as we know, monsoons has been good. December quarter happens to be very good for the cement play, and Dalmia Bharat in the mid cap has been really performing good in terms of EV per ton. So if the Dalmia Bharat can be looked at with a target of 3000. The fourth one is again Supreme Industry, leader in the PVC pipe segment, around 35-40% market share. In fact, they are exporting some PVC LPG cylinders going forward, and this would be a great game changer and value added product for the company, which is margin accretive. The fifth one is PI Industry. As we know, CSM business has been really doing good in China. Due to environmental issues, some of the capacities have shut down, which is benefiting in return to PI Industries. And the last sixth one is Cyient, again a mid-cap IT play in aerospace. This company has been performing good and immune to H1B visa, the kind of issues going on in US. Some margin expansion calls also can be expected in Cyient. So these are the all first set of 6 stocks in the model portfolio.
Okay, so a lot of agri names, a lot of rural names is what we've addressed in the first 6. And, moving on to the next, it's mostly concentrated on some defense names. Siddharth Kirloskar, KEI Industries, again from the capital goods, Voltam, Bharat Forge, again a defense name. Shifting towards a defense name, if not yet a defense name, Advanced Enzyme and Graphite India. What's the rationale?
Well, to start up with Kirloskar, again, this is a monsoon play because 35-40% comes from the valves and pumps segment. This company was making losses, now into positive territory. This can be a game changer in next 3 years. The other one is KEI Industries. This is again a consumption play. We know it is one of the leaders in the cable segment, and the kind of orders they've been generating after the next new government in UP in place, I think KEI Industry can get a good volume growth from UP sector and from across India. Voltamp, again, in terms of transformers, T&D business is concerned, we've been seeing because of a lot of government initiatives, these sector will turn around, and transformer segment, being a debt-free company, Voltamps fit the bill with a target of 1433. The other stock would be Bharat Forge. As you rightly mentioned, we have a mix of defense also. They are leaders in the space of forging, but current revenue from defense is hardly 5%, which management is expecting to 15%. We can expect a 12% CAGR growth for this company going forward. So with a target of 1500, Bharat Forge can be included in the portfolio. Advanced Enzyme, being a niche play in the enzyme space, almost debt free, a 45-50% margins can be expected, and a 25 to 30% PAT growth is expected by the management. A niche play in enzymes have not performed that great. We expect a good growth and performance in next 2 to 3 quarters. The last is graphite. Again, in electrodes, the realizations have not improved, where in return they supply to steel industry, where in last 1 year realization has improved to 100%. So we can expect a good realization in graphite. With a medium term perspective, we believe graphite can touch to 296.
Okay, so that's the call coming in on those 6 stocks. And Siddharth, let's move on to the last 3 stocks in your portfolio. Again, some interesting names that, perhaps we don't discuss that often. Sonata Software, again, a small cap IT company. There's Garwari Wall Ropes as well as KEC International. Siddharth, why do you like these 3 stocks?
Well, in terms of Sonata Software into the mid-cap IT tier, being a IT service-centered company, focusing towards more of ROE and expansion of ROE, one can expect 14-15% growth for this year. We like Sonata Software with a target of 220. The other one is Garware Wall Rope, again a niche play as recommended, is the 5th pillar of the entire model portfolio. This company is into the synthetic cordage industry. They are the world's leader in the polymer cordage industry, supplying to sports, textiles, fishing and many other industries. They make those nets. So what we believe is 10% growth can be, CAGR growth can be expected for 2 years, and defense orders would be a big time game changer for this company going forward. KEC International, as I expected, T&D business can flourish further, and the kind of government initiative is there. We can expect a small good momentum in KEC International with a target of 325 with a medium term perspective.
All right, so there you have it, a roundup of all the 15 stocks that Siddharth believes perhaps should find a mention in your portfolio. But of course, do remember this is only a model portfolio. Please do consult your individual investment advisor before taking any investment decisions. Time for another quick break. Of course, when we come back, lots more trading ideas as well as wealth creation ideas will be coming your way. Welcome back. Thanks for staying on with us on Buy Now, Sell Now weekend. And it's time to focus in on the Indian equity markets. Like I said, we came very, very close to the 10,000 mark, but that mark, of course, remained ever so elusive. The question, of course, on everyone's minds is whether or not that mark will be touched in the forthcoming week. Well, let's understand that from our experts, and let's go across first to Gaurav then. Gaurav, on the technicals, how does the Nifty look, placed? Because we did see some profit booking kicking in bits and pieces during last week. How do you see the Nifty moving going forward?
Well, the trend is certainly quite strong. We have seen that any dip in the market, even of a 40-50 point dip, that is being used to build fresh long positions, and the momentum can take it towards 10,000, 10,100 mark. If it sustains, then we can look for more upside. Otherwise, at 10,000, 10,100 zone, we can see some amount of resistance coming in, and the profit booking may take it towards 9,800 mark.
Okay, so what about you then? With all of that's happening in the market, do you think that India Inc. earnings, at least the ones that have come up until now, are strong enough to perhaps lend the much needed support to the markets and, scale that all important 10,000 mark?
Well, market is in a strong footing as it's seen. Result season is going on, and market is getting somewhat leadership from some of the companies and sectors. Today, as the case with Reliance and many other cases before. But what we believe is we require a banking push. I think Bank Nifty should go up. Some of the leaders in the banking space, likes of SBI and ICICI, should perform well to keep the market upbeat and over 10,000 rupees. So what we believe is market is in a strong footing. We can expect a rate cut going forward on the back of strong monsoons. So these are the few near-term triggers for the market, but market seems in a very good fettle. One thing one should remember, investors should keep it in mind. One has to be stock specific rather than looking at index. So stock specific, look at those earnings and keep buying into the portfolio.
All right, so that's the call coming in on Nifty, but how can you really take charge and take advantage of this move that we are seeing on the markets? Let's understand some ideas then. And first up, some technical ideas for short-term investors and traders. Gaurav, what are the stocks that you like to bet on?
I would recommend to buy Equitas. The stock has not performed so far in the rally from 9,000 to 9,800, 9,900, and it's seen a good amount of buying from the base formation seen around 300, 310 zone. Momentum it is quite strong. It's on the verge of giving a strong breakout on daily charts. One can have a stop loss of 320, play for targets of 400. And second would be buy on Manappuram. The stock is consolidating since last few quarters. It has a strong resistance at 104, 105 zone. It's just about giving a close around these levels. If it sustains these levels, there will be a breakout from triangular pattern, and it can head towards 125, 130 in a relatively short period of time. One can have a stop loss of 98 and play for targets of 125.
Okay, so those are some trading ideas coming in from Gaurav Bissa. There's Equitas as well as Manappuram Finance, both buy calls. But for those investors who want to keep their money in equity markets for the long term, Siddharth, what would you advise them to start off with?
Well, the first stock would be Garware Wallrope as recommended in the model portfolio itself. This company is into synthetic cordage industry. In fact, they are leaders in polymer cordage. Two main things to look at in Garware Wallrope. First is the domestic business, which they cater into deep fishing, in terms of agriculture, sports. They make nets. There the company has been really doing good. Margins are expanding. Numbers are good. Going forward also we can expect a good set of numbers. Second is the company is foraying into defense space, and there can be a big order for defense as high as 2,500 crores for the company. Very near term we can expect a 100 crore order book for the company. So the 10% CAGR growth as a company can be seen for next 2 years in Garware Wallrope. Looking at the entire scenario, we expect a target price of 1,025 with a medium to long term perspective. The second idea would be Finolex Cable. As we know that this company is into electrical and telecommunication cables. A very big news which has come in for this, a positive for this company, is Cabinet has cleared the second phase of BharatNet project, which would be biggest beneficiary for this company. Going forward, what we expect, this company plans to make over this company from a cable company to an electrical company. Company already has switch gears and fans in its kitty. They expect to launch water heaters also. So being a consumption company also, the valuation has to come a little on a northward. We like Finolex Cable with a medium term perspective with a target of 640.
Okay, so two ideas, once again having a hint of defense in them, Garware Wallropes as well as Finolex Cables. Gentlemen, thanks so much then for joining us on Buy Now, Sell Now, helping all of our viewers out with their queries as well as giving us your top picks. With that, we'll wrap it up on this edition of the show. Thank you for watching and have a lovely weekend.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.